Coinbase got a huge win late last week when the SEC dropped a lawsuit against not only Coinbase, but also Robinhood. And that potentially opens up a bunch of options for the company going forward. It doesn't really provide legal clarity that Congress ultimately needs to provide, but it does mean that there's not going to be the same pressure from the SEC, which is basically going to say, hey, you have to show, which has not been upfront in answering questions like, how do I register a crypto security? What sort of tokens need to be registered? The rules were really vague, and then they were ultimately enforced through these lawsuits. And so that put Coinbase and a whole bunch of other companies in the industry in a very difficult position. So I want to go through exactly what management wrote about this case, what they called righting a major wrong, and what this may mean for the future. Because I think the future for Coinbase is getting brighter, but that doesn't necessarily mean we know exactly what that looks like. But I'm going to show you where you need to look in the company's financials for long-term growth. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Here's that blog post that I mentioned. The SEC staff has agreed in principle to dismiss its unlawful enforcement case against Coinbase, subject to the commissioner approval. That is likely to happen this week at some point. This is a victory for not just Coinbase, but for our customers, the United States, and individual freedom. There is some history that Coinbase goes into saying that in 2021, hey, you know what? We went public. We gave a ton of information to the SEC about our business and disclosed how exactly it worked and what we were doing. 2 years later, the SEC sued the company, saying that they were listing unlawful securities. And that was in large part because of political leadership. And Coinbase says that those changes were in large part because of political changes at the SEC. Now, those political leaders have changed, so the enforcement obviously moves in the other direction. But that creates the ultimate tension that we have today. Yes, there's a little bit more clarity. Basically, we're not going to have the SEC suing Coinbase for these exact same things right now, but we still need to have Congress act to actually lay the groundwork and give companies like Coinbase clarity about what they can and can't do on the blockchain with tokens. Because of this leadership at the SEC or any other agency changes just 4 years from now, we could see things revert back to where they were even just a few months ago. But I think what's ultimately most important for investors is, where are we going to see changes in Coinbase, and where is there going to be promising growth for the company long term? And so let's get to some of the numbers. Let's start by taking a step back and looking at Coinbase's business. You can see that historically, transactions were a vast majority of the company's business. Going back to 2021, $7.3 billion worth of revenue. Only about $500 million of that came from non-transaction revenue. Most of that was things like blockchain rewards revenue. But if you look at the most recent year and even the most recent quarter, which I can show here, the company's growth has been driven by transactions. There's no doubt about there's been more transactions in 2024 than there was over the past year. But look at the growth in non-transaction revenue. So just isolate that alone, because you can see that this is growing at a consistent clip, and it doesn't have the same kind of volatility that you get with the transaction business. So it's not going to be volatile based on the price of Bitcoin or the price of other tokens, how much trading there's happening on the platform. These are companies that are building real businesses, real use cases. The orange section that you see is stable coins. That's the portion of revenue that Coinbase gets from their partnership with Circle. Circle runs the USDC token, but they actually started it with Coinbase. There's now a few partners that generate revenue from this. Binance joined recently. So that's why you see that revenue drop just a little bit in the most recent quarter. So Coinbase basically agreed to allow Binance to take some of that revenue because they want to grow the USDC ecosystem, make this the main stable coin that we have on the blockchain, which it's on its way to doing. And there's a huge amount of revenue, almost $1 billion run rate for Coinbase that could reach over $1 billion in 2025 if the current trends continue. Blockchain rewards are primarily staking. And then you have interest and finance fee income, custodial fees. Remember, Coinbase is one of the main custodians for most of the crypto ETFs that are out there, and other subscription and services revenue. As all of these combined continue to grow, that's where we're going to see most of this non-transaction revenue coming from. So I like to think of Coinbase as the AWS or identity solutions. So the sign in with Google, if you will, and kind of the bank of the blockchain. So that's the infrastructure role that the company is playing. And now that we have a little bit more clarity, again, we need more clarity, but now that there's at least some clarity in the US that the government is not going to go after Coinbase, we could see more of these infrastructure pieces continue to grow in 2025 and beyond. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So those non-transaction revenue sources is something you can watch to see, is Coinbase actually building out the infrastructure that's needed for the blockchain, and is it being adopted, because there's a ton of competition in this space. But the bigger question long-term is now a good opportunity to buy this stock because of that opportunity? And the price is not terrible, but it's also not extremely attractive. Just as I'm recording, the enterprise value to sales multiple is about 9 on a forward basis. It's a little bit under 7. So you can find cheaper stocks out there. That only includes that huge jump in revenue from transactions in the fourth quarter. So if that continues in the first quarter and throughout 2025, which it has so far, that should be a little bit cheaper going forward. Price to earnings multiple is about 25, and on a forward basis, about 32. So investors are not expecting the current profitability to continue. Again, those numbers can be really, really volatile depending on what happens with the volatility of the crypto markets, and in particular, tokens like Bitcoin and Ethereum, which have been very important trading assets for Coinbase. You're also in this strange position in the industry where things like meme coins, which probably aren't going to last as a value adder, and there's something that Coinbase typically doesn't adopt very quickly, has become a very popular piece of the industry that's moved a lot of the trading that's going onto native crypto wallets and onto decentralized exchanges, or DEXs as they're called. Coinbase is a centralized exchange, so it's moving some of that trading off of the centralized exchanges. So there's a lot of uncertainty. I think ultimately a decade from now, we're going to have a lot more infrastructure built on the blockchain. Coinbase is going to play a huge role in that. The thing that I'm the most bullish on is the use cases for the stable coins, in particular USDC token. I think that can be ultimately very disruptive, because it's much more efficient to transfer money from point A to point B with stable coins and with the blockchain than it is with things like credit cards, where fees can be as much as 3% or even a little bit more, depending on the size of that transaction. Those fees are significantly lower on the blockchain. Even a company like Stripe, which has started to accept USDC token, their fee is only about half for USDC token exchanges compared to what they are for credit card fees. So they need to make their about 1% spread. But then the rest of that transaction with a 3% credit card fee is going to go to the credit card companies and the banks that are issuing those credit cards. So I think there's a lot of potential ahead for Coinbase, but it's difficult to predict exactly where the company is going to grow, exactly what it's going to look like a decade from now. I think at the end of the day, you're betting on Brian Armstrong and the team at Coinbase. This is the one leader that's publicly traded. I could see them actually being aggressive in buying a bunch of companies in 2025, especially since that should be more acceptable, not only for crypto companies, but for companies overall. So one that I'm happy to have in the asymmetric portfolio. I haven't added it for a bit, but if this growth rate continues and if the blockchain adoption continues, I see a bright future ahead. But let me know what you think about Coinbase today and this ruling from the SEC. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.